Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Monday, August 14th, and then we'll see how things look for Tuesday, August 15th. We had a bit of a bounce. So far, right now, the 50-period moving average on the S&P is holding. We're wondering, can that continue? Are we going to keep bouncing up from here? First, please be aware that I am going to offer a free online course in September. I haven't actually picked out the dates yet. I'm looking at a Tuesday, Wednesday, Thursday, probably about lunchtime Eastern time. I'll be going through my approach to technical analysis because it tends to be a little bit different and some of you might find that interesting. I'll also be going through some basic strategies that you can implement, as well as talking about support and resistance. Let's go back and talk about what happened. Mega caps did outperform, and that's what helped the S&P and the NASDAQ 100 to climb on Monday. Interest rates continue to climb as well. If they keep going up, that's going to spook the market, and that could really have some negative effects. The S&P still remains above its 50-period moving average. The S&P, though, is still under 4,500. On a short-term basis, we have the Stochc RSI, the CCI 20, and the stochastics that are giving us extreme negative readings, also suggesting that we continue to be oversold. The dollar was up and interest rates were also up. Usually this is a headwind for stocks, but it didn't really work out that way on Monday. All of the yield curves that we follow remain inverted. Sentiment is positive at 66, where it ticked up from 65. Our trend is now positive. The green line is starting to come back up. However, on the short-term ADX, we've gone into a trendless environment. We're looking a little bit better in the intermediate term, but the ADX is below its moving average. Our bias is positive, and I've changed our momentum to mixed. Here's the intraday chart that shows that we did have a lower open below the daily pivot. Right after the open, we got back above the daily pivot. We went above the unchanged level. We got up to R1, and then we spent the rest of the day chopping above and below R1. Right at the end, we saw a little bit of strength come into the market, and we ended up closing at the high, but we never made it up to R2. Looking at the growth to value ratio, it was strong for the whole day. We shot up right at the open and then pretty much went sideways after that. So that's looking a little bit more positive for right now. Here's the ADX, the intermediate term chart. We're declining with the ADX since we're below the moving average. The green line is coming back up a little bit and it's on top. So if anything, we default to positive according to this chart. But since this is declining, if we chop sideways for a while, the ADX could drop below 20, suggesting that we're in a trendless environment. We're already seeing that on the shorter term chart. The ADX has dropped below 20. The green line is on top. It's hard to see. It's below its moving average. So we've gone into a trendless environment in the short term. The daily chart is showing how we came down to the 50-period moving average and we were able to bounce up off of that. We're wondering if that will hold. On the bottom, we see where volume continues to drop off. Here is another look at the moving averages, where we're coming down to the 50-period simple moving average. So far, this is holding. We're wondering if that will continue, and then if we can get above the 20-period moving averages and close there, that will really help switch things more positive. If we fall below the 50-period moving average, that's going to turn things a lot more negative. Keeping an eye on the Chaikin money flow. This tries to measure the smart money. Even though it's negative, it is showing some improvement where we had been seeing a steady decline. Also, keeping an eye on our trend line study, we're below the shorter term trend line, but we're still above the intermediate term trend line. This is lining up kind of with the 50-period moving average and providing support. The NASDAQ, which dropped below the 50-period moving average last week, that was negative. It's coming back up to the 50-period moving average now. We're also seeing that same thing with the NASDAQ 100. We actually closed a little bit above the 50-period moving average. When we look at the momentum of the NASDAQ 100, it's clearly negative. That's the negative side. On the positive side, sometimes when the PPO comes down to this midpoint, that will mark a bottom. We saw that back in March, suggesting that this is just a pullback. If we continue to fall below this, that's going to make things look more negative. The small cap index also came down to the 50-period moving average and is starting to bounce back up off of that. Will that provide some support? We're seeing it in the Russell 2000 index. Even though we dropped below the 50-period moving average, we did get above that and close above the 50-period moving average. Otherwise, things are still looking negative with the RSI and the MACD. The mid-caps have not come down to the 50-period moving average. I just wanted to show this for comparison. The FANG index is still below its 50-period moving average, but it had a pretty good day on Monday. We're below the resistance line with the S&P 500 weekly chart. We're also below it with the NASDAQ 100 weekly chart. So what's our outlook for Tuesday? We will get earnings reports that'll be coming out, but it is going to slow down a bit now since most of the S&P 500 companies have reported. The technicals are negative, and we're below support that we broke last week. Can't take that away. However, as long as we're above the 50-period moving average, there's still some hope that we might get a bounce. As far as the economic reports, we will get the retail sales report. That's a biggie. We'll get import and export prices, the Empire State Manufacturing, business inventories, and the NAHB Housing Market Index. We're keeping an eye on the geopolitical events, but right now it's more technical with what's happening in the market. And will we see a follow-through bounce from those levels? Here's the updated economic calendar for the week showing what's coming out on Tuesday. On Wednesday, we'll get industrial production and capacity utilization. On Thursday, we'll get the leading economic index. We won't have any reports on Friday. Stock Traders Almanac statistics for August 15th were neutral to positive with the Dow and NASDAQ. We're actually more positive with the S&P 500. Here's a chart where we look at the 4-year presidential election cycle. We're in the 3rd year right now. The solid colored lines are what's been happening. The dotted lines going forward is what has happened historically. We pay attention to the green line where we tend to see some improvement here, then a little bit more weakness later in the year, and then we tend to finish the year off with more positive price action. Also keeping an eye on the NASDAQ. It seems like we've been watching this forever. Have we finally bottomed with this weakness that we see in August, and will we get some kind of a bounce out of this? Also, comparing where we're at right now with other pre-election years, we're in the pre-election after midterm bear. That's the green line, and that's the situation we're in right now. The purple line is the S&P 500. We do see some strength here going through the month of August. We're wondering if it will happen this time as well. We will be on the 11th trading day of the month, and I have a little further breakdown here showing that from the 8th trading day through the 13th trading day, following the green line, we do see some bounce from this historically. Will that happen this time? So our scenarios, we're still going with the down one. Our technicals are negative. We broke below some support last week, but on the positive side, we're above the 50-period moving average. We can't go with the up one right now. Our charts just don't back that up. We could go a little bit with the sideways trend in the short term because our ADX is dropping below 20. We're not there yet with the intermediate term chart, but it is a weakening trend. What are the warning signs? We did see a convergence of these short-term bear signals. Now we're starting to ask the question, have we finished with that? The long-term trend signals may be signaling a top. Seasonally and historically, August is kind of a weak month, but we're entering a positive time, at least during a pre-election cycle. The S&P 500 oscillators are negative, as well as the NASDAQ 100. We'll also be watching the PPO on the NASDAQ 100 chart to see if it bottoms out and starts to come up. The VIX is showing a lot of complacency, even though it's still continuing to climb. The NASDAQ and NASDAQ 100 are below their 50-period moving averages. Can they be regained? They're trying to, but they haven't closed above those levels yet. The cumulative new highs and new lows for the NASDAQ are showing weakness. We're above the level that we set back in 2007 with the 3-month yield. S&P 500 growth is weakening, but it's still in a longer-term uptrend. The weekly pivot that acted as resistance almost 3 weeks ago now was the point where we topped out and we've been going down since that time. The parabolic SAR is negative. Also, be aware, the weekly parabolic SAR chart has also turned negative. The vortex is negative, and we're dealing with earnings season on a case-by-case basis. On the positive side, we do have seasonality and setups that remain in the background, and I went through those in the weekly video. The daily special K chart is positive where the weekly chart is negative. The longer-term equity put-call ratio is still looking positive, but it's starting to turn up, so we're watching that. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture, but we're seeing some weakness in that overall ratio. The S&P is outperforming utilities. The staples to S&P 500 ratio is declining. The Russell and the small caps, they're still above their 50-period moving average, and they've generated a recent golden cross. The mid caps also generated a recent golden cross. Small and mid-cap growth continues to be positive. The financial sector has generated a golden cross. And then we're going to ask this question: will the 50-period moving averages hold? Our conclusion: we're negative and we're below support that we broke last week, but we're still above the 50-period moving averages. We'll be watching the small caps, the Russell 2000, and the S&P 500 50-period moving average, especially on a closing basis. In the short term, we're negative. Are we starting to see a recovery? In the intermediate term, we're still negative, and in the long term, we continue to be positive. Thank you. Please feel free to check out the full-length video. I hope you have a great day, and I will talk to you in the next video.